We did a nice, 2 to 3 day pullback here, including this nice doji here at the bottom. Looking for a reversal here as we have started going up now. Looking for a new all-time high, looking into 37.30 to 37.54, looking for the Santa rally. A lot of people have talked about that recently. So it usually goes into the beginning of the new year. So I'd probably say, let's see. Okay, so we have this week, which is a bit shortened, and then next trading day starts the 4th of next week. So January 4th is next week. I'm probably going to start a short position by the end of the week, a small short position, as I do think, definitely the market needs to come down a little bit. We had to move from, let's just say from the total bottom, 32.30 all the way up to 37.20. So that's a 500-point move. And we didn't get, these big downturns like we had before. Obviously, March is just a different story there. But I do think we do need to pull back to at least the 3,400 to 3,500 range, get a nice strong pullback, and then we could, set up for a higher move. So I'm going to go into the watch list and, just get it started going here. So we have Palantir, one that I've been on a while now, probably 2 to 3 weeks. Give or take the chart here, you may have seen others post different, wedges, and, mine may not be exactly correct either for at least the top part here. But you can see it's riding that 14 SMA, which is the green line right here. You can see it's held this bottom part of the wedge down here. I do think this should get a run into in the Santa rally into the new year. The breakout point would be around $29.60, pushed into 30, going for a new all-time high at around 33. It's possible it happens this week, but we'll wait and see. I'm in May 21st. Let me double check. I'm in May calls for sure. I know that. I also have long-term shares, which I'm not going to sell until around 40 to 50. But the May calls, I'll probably sell around. I'll start to sell around 33 to 35, and probably get all out around 40. So that's my plan here, and we're looking for a hold of 26. Probably around. Let's see what we had here. Around 26 was the range down here going across. Yeah, so I wouldn't want to break under 26. I really wouldn't even want to break under 27. That's where it would start to get a little, risky, and we kind of be breaking down into the bottom of that wedge here and going even lower. So that's one play we have going into this week. Next play is Teladoc. So this is actually one. Let me find the exact post. I know Kathy Woods has been loading this, the ARC trader. Let me see. One moment. So yes, ARC and Bailey Gifford have been loading. Their top 3 positions are Tesla, Roku, and Teladoc. So this is one that's interesting. And Kathy Woods has loaded at least over 300,000 shares in the past 2 weeks. You can see it's kind of bottomed around this area. Going across, I have the demand zone, the green, box here. And you can see it's held this area, whether it be support or resistance. Now it's obviously acting as support going across here. It's held it strong, and it's been doing very well there. So definitely, got to watch this one going into next week, going into 2021. It could definitely go higher. There possibly could be something that we don't know about that, could be on the horizon, possibly a buyout. Not saying, I'm just saying things in general, but it's very possible that, something could be going on behind the scenes that we don't know about, and that higher traders such as Kathy Woods, could have insight on and be thinking it's possible. Teladoc's a great company. Telehealth is, possibly even the future. So it's something to think about. And we do have, resistances above, probably around this 220 range. You can see a lot of candles are closing, opening, and or wicking in this area. So that calls for a resistance area around 220 to 223. Breaking of that area, we can go into the new all-time highs around 250. Probably give it, we'll see how that plays out. Probably 3 months max. It probably can hit that area. So we'll see how that plays out. And we are looking at February 220 to 230 calls going into that. IPOC, I know a lot of people have been on this one. I know I've seen a lot on Twitter and on other, traders' minds. And here I have the fib set up here. You can see it's just going straight up since around 1050 here. The 14 and 30 SMA are pretty far away, so that's something to think about. RSI is definitely high too, around 88. Got rejected around that 15 area. You can see the same thing happening on this candle and then coming down. So it can't close above that 15 area yet. That's something to look into. Probably would want to get it pull back into 14 to 14.25 and see if it could hold that area, possibly an entry for a long on shares only, in my opinion. This one is merging with Clover Health, so that's something to look into as well. Okay, so Fubo, this is an interesting one. You're not going to see it here, but obviously we had a pullback from the 62. This one's been very strong from $7 months ago, and it's continued to rise up. And we had a run from 27 straight to 62. So let's do the math here. 62 minus 27, got 35. So let's see. So half of that move is $17 to $18. And from 62 all the way down to 43 is basically that half of a move, right over it at $19. So that's something to think about here, as 50% of the move has retraced. Also in after hours, which you're going to see here. Hold on, where do I have it? I don't have it. Okay, 1 second. Let me pull that up. You can see ES is breaking out now, pushing higher, 37.08. You can see in after hours, it was trading at 41. Apparent news came out on a downgrade. I don't know if the volume was really that much. Actually, you could see some, big share lots here around 80,000, 100,000. So, even if it opens around that 42 range, that'll be a nice candle, gap down, and it'll be a small candle in my opinion. And then you could look for a bounce around this FUB area, around that 41 to 42 range for an entry. Looking into calls or even shares for those who want to just trade shares. The idea would be January 50 calls, just looking for a mini bounce, play it out and see how it goes from there. I think this one, is good from that area off the 3-day dip, 3 red days in a row, and should be good. As you can see, the RSI, it's kind of settling back down. Probably will open around 55 tomorrow. So let's look into the next one here. And this is one that's been stuck for a while now. Another one that was stuck, let me just pull this up quickly, was Shopify. Here I had an inverted head and shoulders of what I thought, it definitely was. You can see the left shoulder here, the head, peeking out deeper here, and the right shoulder here. You can see it broke this trend line and then continued higher, thinking this play hits 1,400, 1,500 over the next 2 months. But you could see from here, let's just say from July 1st, it basically chopped all the way until December 16th. So, 3 to 4 months there of just straight chop. And then you have the same setup here. Apple did the same thing. And now you have the same thing here on Amazon, except this one's wedging. And you could see it. Let's just go from here again. Basically that July move, same thing as Shopify, kind of, from July, other than, this setup here right here from September, where it kind of continued higher. So if you want to say from September, 3 months of, full on chop, and we're starting to get to the end of it here, at least in the wedge part of it. RSI is rising over time. So that's strong divergence there. And, we're just looking for a breakout higher into this move. And once we do, I definitely do think we push into this 3,400 and obviously break all-time highs going into possibly 4,000 in the future. So that's one to look into. Now, I know this is a hefty one for options. You can go with January calls, you can go with February calls. February would probably be the safest, so you get time on this one. But, once it moves, you're going to get, the premiums will definitely rise in your favor. So you just got to play this one smart. Definitely don't put a lot of money in it. Once it starts moving, you're going to get paid out either way. You could even go shares. So that's just definitely one to look into. I've seen a lot on this one from a lot of traders over the weekend. CSCW, I looked into it, and they do have a product or something with their company coming out this week, the 30th or 31st. And it has a mini gap here around 1. So that's a strong resistance in general. I see it was gapping up in aftermarket. It was around 82 cents. And this is one to look at tomorrow morning, possibly even Tuesday, seeing where it goes from there. Once it does, if it does at least, break over that $1, you got to look at these next resistances, probably around 125. And then you got this 150 around here, 140, 150 going across, where, let's see here. Oops, didn't mean to do that. You see it's kind of had that top, it had wicks there, had closes there, and that's an area to look at. So that 140 to 150 area on this one. We will go into GIX. So this is another SPAC trade, and these have been going crazy. This one is another telehealth company. So I believe the company that's merging into this special acquisition company is UpHealth, which is a telehealth company, something like Teladoc. And this one is interesting. You have a cup forming here, just like any other SPAC that is really traded. It's at a low price. It was at 10 a couple of days ago, starting to build up here. And I would look for an entry possibly tomorrow around the 1080 range and hold it out till around this, at least this new all-time high at 12, possibly looking into 15. I think this is one of those that could be targeted and, definitely watched over the next few days. So I would check this one out, at least look into it, and go from there. If anything, I would only be buying shares. I'm not buying options in these SPACs. So that's just something in my part. But of course, you guys could do whatever you wish. I do think this one will pull back a day or two, probably get around that 1080, 1060, 1070 range, and that would be a good entry in my opinion. So we could look at that one. So here we go into the conviction list. Here's the top 2 that we had last year, JMIA, and apps. And we had this one from around 2 to 3. Pretty upsetting that we sold pretty early on this one, but it's been so strong. And JMIA, I still have long shares from around 1280, I believe. And what is it at now? 43. Do I have it up here? No, I don't. But yeah, it's around 43, I believe. Yep. And this chart right here, so it's going to be a little wicked with all the fibs I have here, but I could actually get rid of one of them. Hold on. Okay. But yeah, you could see the cup here from that bottom. And now we're going to be growing the handle. This is a monthly chart. I mean, on all formats, you're obviously going to see the cup. So it's very interesting to see what happens here. The cup ends around that, let's see, around this 50 range. And you can see we did hit that right around it, that 49.13. So, trying to see this one pull back a little bit. I would like to get I would say the max it does, let's see, I would say the max pullback is around 32 to 35, which would be strong for the handle. And then we could see a push up into, all-time highs over 50. Now, this is a company that, you could see here, it's basically the Amazon of Africa. I'm going to go into this one quickly, just so you guys can see why I like this one and why I have liked it. They've been really changing their platform. They've been growing. They don't have, they really don't have that much debt. Uh, you know, don't really take FinViz as what it shows here, but they truly do not have much debt, as they show in their financial results too. So 1 second. And the reason why I like this one is, hold on 1 second, is it's really grown as a company, and they're really changing. Now, quarter over quarter, they're growing. Year over year, they're growing. They're changing. You could see here, gross profit increased 22% year over year. Now, this was the big thing that really caught my eye. They were losing a lot of money. They decreased it by 49%. Let me see if I could find it. It's in here somewhere. Yeah, so they lost 28 million, which decreased by 49%. At one point, they were over 100 million in 2018 or 2019. So they're really, cutting costs and starting to possibly become profitable later this year. And that's something to look at for sure. So they have a payment processor. They do e-commerce, just like basically right here, e-commerce, just like Amazon. And it's definitely something to look into going forward. You guys can definitely do your due diligence on this one as well. Africa has the biggest population out of any country in the world. And I think e-commerce is going to be, obviously is going to be one of the biggest things going forward, and has already started to show that. So this is definitely one to watch going forward. I do think this one continues to raise higher and go higher. I definitely see 75 to 100 price target into 2021, and I'll be a buyer of that. I've held my shares since 13, and I'm going to hold them until that area. I'm definitely not selling those anytime soon, and I think this definitely has more growth into it, and I think it's going to be a profitable company, at least this year. If not this year, definitely quarter one or quarter two of 2022. So this one's definitely turning around, and I definitely want you guys to at least look into this and check it out for yourselves. APPS, another one. This one has grown a lot and has continued to grow. We had this from 2 to 3 off of earnings. It was turning around financially, and as you could see from here, just really just continued its growth, at least stock-wise. And same thing with the earnings as well. They're continuing to grow. They have no debt, a little lower on cash, but as you can see, just the estimates here and stuff like that, you can see the growth this year, and you can see the growth going into next year and what they think. So we'll go into this one too, just quickly. I won't be doing this for any others, just to show you guys these past two and why we like them. Just let me find the earnings. But yeah, so this is the 2021 earnings report, and the reason why we like this, it was continuing its growth. It turned profitable and continued to, be profitable quarter over quarter. That's what we want to see. You want to see little debt, continued quarter over quarter increase on revenues and earnings per share, and that is what this company has done, exponentially. 116% annual growth for the revenue, so that's great to see. And you see the net income of 10 million. And they're really growing here. Let's see. I'm trying to see some key points that I saw. This wasn't the earnings I looked at. I looked at the earnings a while ago, at least 6 to 12 months ago, on why we like this one. But there's definitely growth in this company. And they're expecting to go higher and get into 100 million revenue within the next 2 quarters. So that's something to look at. Now, with this one, it's kind of the same thing. I'm looking for around that 75 range. Definitely needs a pullback. I would look for around a $50 entry, and I think you should be good from there. I would probably look for shares and maybe even long dated calls. Same thing with JMIA. Let's see. So DraftKings, this is one I've liked for a while too. This one's been sitting in a little area here. It's been stuck around that 50 to 53 range. Can't really get over it. 55 actually. And with states becoming legal, this is kind of like, those weed plays that a lot of people follow. With states becoming legal with weed, it's the same thing here. With states becoming legal with gambling and betting and stuff like that, this will continue to rise as well. I do think DraftKings has a better platform and setup than FanDuel does. DraftKings, one, has gambling / betting. They have their sports books and everything like that, as well as their daily fantasy sports, which is legal in about, I think, 48 states. So that's good. But the gambling is the one that, and their sports book is the one that's not legal. It's around 20 to maybe 25 states. And, going forward, it could possibly be a lot more. I think this one definitely reaches the 75 to 80 mark this year. And I have shares of this one at around 42, 43, and I'm looking for long-term calls as well. So, definitely look into the business, definitely look into, possible legality across the country, and that could be one to look into. And yeah, over the next 2 to 3 years, I definitely think this could be, $150 to $200 stock. So that's something to look at. So BlackBerry is starting to break out of a long-term, I wouldn't say downtrend, but possibly is. I mean, they've been flat and sideways for so long. I mean, it has gone down, and you can see from here, from $4, it hit let's see, $10 we got here. And we're at around $7 right now. So I wanted to show you guys on the weekly chart here. So this, like I said, this is the 2021 plays that I think will be good. And you can see a falling wedge. I know you can't see it really well with the fibs. You can see the lines I drew here going across, and it's right near that breakout point. The 52-week high here was the $15 range right here, 1463. So that's something to look at once we do break out. First breakouts would be $10 and then that $14. Once we break that, we could look into $20 to $25. And I think this one could definitely push into the 20 range this year. So I'm buying shares and long dated calls on this one. I'll be looking for probably January of 2022 for the calls at around $15 calls. And I think this is definitely one you guys should look into as well. I just love the chart here. It's trying to break out here. And as you can see, others have, it's continued to, run up. So we'll see how this plays out. I'll be looking for an entry possibly tomorrow, because you can see we had basically a three candle dip in a row. And off the break of that wedge, we could see, push higher into that 15 and higher. So we'll be looking at that. FLNT. So this is another small cap play. As I stated, APPS here. We first founded APPS around $2 to $3 when it started to turn financially. Now FLNT is kind of doing the same thing, and this one is an advertising company. And if you just look at the trade, is it the Trade Desk? Yes, yeah, the Trade Desk. There's another advertising company, and of course software. And you could see from here they obviously went up 500 to what is it? Let's see. So it shows 258% here, but they definitely went over 500% this year from that 200, at least from April itself in March, all the way to 900. So something to look into, and I'll quickly go over that one here as well. You could see little to no debt, got current ratio and quick ratio. They're expected to grow, and they've done really well turning around this year. You can see it's starting to break out chart-wise too. So it's definitely going to need to pull back to around the 475 to $5 range. That's where I'd look at for an entry, and I'm only going shares here. Going to be buying this one just like I did APPS and looking for an up range into the $15 to $20 range, which could be a 300 to 400% play. I'll be holding this one for a while. Quarter over quarter, they've really grown financially, just like APPS did, and that's why we pulled the trigger on that one. So you can see here, net income, this was negative over the past quarters, and then they've grown exponentially, quarter over quarter increases with revenues and net loss turning into net income. So that's great. You can see EBITDA up 167% over quarter three. So even year over year, it's great growth, something to look into. And they're an advertising company. So that's great to see. Okay, so now we have GRWG. We got 2 more left, I think. Let me just double check here. We got a few more, but I'll just slowly go through these. Okay, so GRWG. Now this one has had strong growth. Earnings wise, same thing here. Earning wise, they've grown. I would definitely want to pull back at least to the 35, 38 range and try to get in there on shares, looking for 50 by probably March of 2021. So give it a 3 to 4 month range. And I think this is going to be a good play into 2021 too, possibly a 100% gainer from here. It can go higher than 75 possibly. I mean, over the past couple of months, we've seen a lot of things happen. So if it continues to grow financially as expected, I think this one could, follow in the footsteps of others. So we have Peloton, and this one was a big winner due to COVID. And in general, it's a great company. A lot of people have been buying their equipment, obviously, due to COVID. I've heard a lot of good things about them in general as well. So let me go into the daily here. And it's possible we could actually get a push up Monday, getting over this 167 with the setup we have here. But I'm looking for 200 on this trade going into this year, possibly even higher into the 220, 225 range. And those are just my my price targets. It doesn't mean we're going to hit those areas. It doesn't mean we can't go past those areas. But this is a strong play that I'm looking at into 2021 as, COVID is still a risk right now. And I'm definitely seeing people still buying these machines as well as, investing in the company. I know a lot of funds as well are is in this company and has continued to buy it. So it's definitely something to look at going forward and possibly breaching that 200 area pretty soon. Definitely needs to pull back though. And it would be a great buy if possibly this gap filled around 145, which could happen on the next market tip. So, keep that in mind. And, some of these setups, you got to wait for a nice pullback and then add on the dips as it keeps rising. So EXPI is another one here. This is basically a real estate company, and they're growing into new countries. They're moving into new countries, and this is something to look at too. I know a lot of agents actually who work for this company, and they're treated very well. They have a lot of profit sharing programs and everything like that. So this company isn't, it's worried about growth, and it's pushing for growth, and it's only going to grow with, the agents that basically supplies that growth. And if they're not getting paid well, or if they're not getting treated well, how are they going to grow as much as they want without basically their backbone, which is their agents? And they're already growing in countries. They've just started in France and in other countries over the past few months. They've probably went into around 20 countries. So, this is definitely one to look into. I definitely think this could reach 100 over the next few months in general. So definitely keep an eye on this one as well. And it's grown very strongly since $8 in just June. So $8 to $80 in just basically 4 to 5 months. So actually 5 to 6 months, sorry. So definitely something to look at there as well. And lastly, we have CRWD and then some extra names that I have down here to look at. Now, CRWD, CrowdStrike, has been doing very well. Another basically COVID stock, and definitely needs to pull back here. Had strong earnings, growed up and continue to go higher from there. And I would probably look for a pullback to around 210, maybe even 205. And we could possibly look at 275 by the end of 2021. So that's a $70 to $80 gainer from there, and possibly even pushing higher into the 300s. So, I want everyone to basically do their due diligence on these companies. Definitely chart your own, stocks out and see if you like any of these. And if you do, I'm glad I pushed you in a nice direction. I'll possibly be taking entries in most of these plays as I stated, and I gave my reasoning on, if I wanted to do shares or options for myself. And, that's where I'm really going to go from there. Now, ES is going to be the thing that everyone needs to watch going over these next few weeks. I believe in a week or two, we're going to get a dip down, like I said, into that 3,400, 3,500 range. I would say the max top here is 3,754 to 3,800. So I know that's a $50 range, but it's possible you could break out higher and push into that 3,800. But the market is definitely, in need of a pullback. And that's where you can't be scared to buy. If you are a little bit scared to buy, at least, start a position, do like 5% or 10% of your regular position. So you're at least in case you missed the total bottom, and then you can keep adding on the dips as it rises up. It's just something to think about. That's where people, don't do the buying. They do the buying on the way up. And, so that's where a lot of these people get caught, buying the highs. So, try to buy these dips and at least get starter positions. That's, at least a safer way than, putting your whole account in one play at one time and expecting it to rise. And then, the next day the whole market drops. And here's another play I actually wanted to look into. So let me extend this out a little bit here. So APPN, this play grew very nicely from $60 to $216 in a matter of November 2nd to November 27th. So 3 to 4 weeks, it went up $150 basically. And now it's setting up, it's kind of consolidating here, setting up here, slowly walking up. Needs to break over like 165, 170 to push higher and get into this 190 to 200 range again. So this is one to watch as well. The bottom I would look at here is you don't want to really get under that 139. Max would be that 130. So this is one to look at going forward, and you could be looking for a play to 190 to 200. So a $30 to $40 play, probably over the next 2 months. So keep this one in mind as well. Other than that, there's not really much else to go over. Here's long terms that I have on the right side here that I either have or want to have. Let's see. For example, Tesla, I'll definitely go over this one shortly before we end this session. It had a nice 2 to 3 day pullback from 696. I think we could definitely reach that 700 area, possibly even this week. So look into that as well. You could probably do weekly calls or 2 week out calls for 700, and I think we should get a move up there. At least hitting this 675, 680 range, but I think we should push into that 700 range possibly this week. And going back to Amazon, keep an eye on this because the beast is waiting for a move. Whether it be down or up, I would expect up. But of course, if the market dips, it could definitely, join it downwards. and probably hitting 3,000. So watch this one. But if the Sandy rally continues this week as expected, and as it is currently, in after hours, or at least I guess you could say, pre-hours on this Sunday, we could be getting a move to 3,300, 3,400 this week because Amazon moves around $70 to $100 a day. So we could be looking at that. Other than that, have a great night, guys. For those of you that are in my room, I'll be in the chat. If you guys want to join our chat room, I'll be posting a link right now. As well as we're having a 35% off sale for the paid chat room going into the new year. So I'll be posting that as well. The site is www.BullTradeFinder.net, and the discount code is capital N, capital Y, 35. So NY35, both capital for the N and the Y, for 35% off your membership. Other than that, have a great night, everyone. And I'll be posting this video shortly.